A few weeks ago, this topic, our discussion would have looked and sounded a whole lot different. We would have had some promising updates for 2026, but after Hurricane Melissa now, I'm not so sure. So, what can we expect for Jamaica's economy in 2026 and beyond?
Well, it's still very early, and we have to wait for the facts from our legitimate authorities as it relates to damage assessment for us to have a fulsome discussion. But what we can expect based on what is available now is that number one, we're likely to see a significant contraction in economic activity for Q4 2025, as well as the first half of next year, as a base case expectation. So, this is grounded in the fact that tourism is significantly impacted, number one, and agriculture is significantly impacted. And what is important about both tourism and agriculture is that they are large employers. They
Mm-hmm.
employ a large portion of the labor force in Jamaica. So what it means is that unemployment would increase by the fact that a lot of that labor would be displaced. And additionally, that would have a knock-on effect in terms of spending and how money circulates. The other side of the coin is that the displacement in agriculture is not totally demand driven, it is supply driven because there would be large volumes of commodities that would no longer be available locally. So we have to do some substitutions by way of imports, but that comes at a cost because what that means is we have to spend more foreign exchange to make that substitution. And just from a supply standpoint, these goods will go to the highest bidder because of the scarcity. Some persons have spoken about the change in food prices at the markets already. Things such as sweet pepper and other ground provisions have started to reflect higher prices. All
If you
that
can
means
even
is
find them.
if they can find it. But what's interesting is that we're going to have a situation which is called stagflation, which means that there will be a pullback in economic activity, which coincides with higher inflation. Typically, it's the other way around. A slowdown in economic activity usually is accompanied by less inflation, but that is when inflation is primarily demand driven. Here we have a situation where the root of the problem is challenging supply. So, because of that supply shortage, it's very hard to contain using just regular measures such as higher interest rates. The BOJ can't just step in and increase interest rates and try and bring down the inflation because that tool, i.e., monetary tools, are typically built to address demand. It's very hard to use them to address supply, which is why post COVID inflation was so hard to tame and it took so
Mhm.
long to normalize because it was a supply side shock. Just to put some numbers to bear on the situation. So in 2019, in September 2019, Bahamas was hit by a Category 5 hurricane. For those who might not remember, it's called Hurricane Dorian. And the damage is recorded at 25% of Bahamas GDP for that year.
Wow.
But for
And we're
hurricane,
we're up to about 31, 30 something percent of GDP, so a little bit more than them.
right. And that's according to Enki Research, which does storm modeling and storm damage modeling. But that is actually on the conservative side. For a
Mhm.
best case scenario, if you can call it that, that would be closer to 6 billion US. But the range that Enki Research actually quoted is between 6 and 14 billion.
Wow.
So the
That's a
midpoint of
big
their
range.
estimate is
It's a
actually 10
wide
billion.
range.
It is a wide range because there's so much uncertainty still, but clearly we're hoping that it's on the lower end and even below that. But as it is, that 30% is being conservative, is what we're saying. For Bahamas, when the storm hit in September 2019, the impact was a 44% reduction in economic activity compared to September 2018. So it's just looking at September 2019 compared to exactly the year prior on a month
What?
by month basis. So that gives us some ballpark.
44%.
Pardon me?
Yeah, I said 44%. I was just reflecting on that number.
Yes. So that gives us some amount of guidance around what to expect. It may be larger for us because our economics is different, meaning in terms of how our economy is structured. We have a larger goods producing economy relative to Bahamas because we have a larger base of natural resources. So, for instance, you would have a reduction in mining. We have more bauxite resources, for example, more bauxite deposits, limestone, etc. Then there's regular agriculture produce, so bananas, grown provision, etc. And what that would do is that it would create a greater commodity shock on top of what would happen on the service side of the economy, which is what we're familiar with when we speak about retail activity as well as tourism. So Bahamas has a larger tourism share of the economy. Their service economy has a greater share of the overall output. Even though Jamaica is also predominantly a service economy, it's actually 70% of our economy. We still have a great share coming from goods producing and things like manufacturing, and what happens to our commodities will greatly affect our output. So for instance, when the Gisco Alpart refinery came offline, it had a significant impact on our output some years ago. That's just to give you some quantitative basis as to what we're saying in this discussion. So we need to get the commodity output up as quickly as possible. We need to get our farmers as much support as they can get. Right now, it's very early in the game. We need to control that situation with water supply so the farmers can start to regularize their operations. But even the rising water levels, we have to monitor that because that can easily start to create a new beast in terms of sickness. Mosquito breeding and those kind of risks have to be kept under
Mhm.
control because one situation can become another, and we want to really monitor that. But
And in order to
that's
get the
just to give
water supply consistent, we need the electricity supply back up to pump the water.
definitely. So there's that as well. And it really broadens the discussion around sustainability, which we've had over the years. Many climate champions have spoken about changing our energy mix and considering more mixed energy solutions, incorporating more solar, incorporating wind, but more so solar in our situation to have
Would that help though,
a
Julian, in a
more,
situation like this? Because how would solar panels and wind farms fare during a hurricane?
well, I've seen from the authorities that there's very little they can do in a Cat 5. Cat 5s really have more to do with evacuation and rebuilding. There's very little, there's some mitigation that can be done, but because of how extreme it is, there's very little that can be done. But what we're talking about though is just a broader conversation about recovery. What does recovery look like? Do we go back to what we were doing before? Do we have the same type of infrastructure and the same type of planning? Do we make different kinds of changes so that we can actually change how we generate energy, how fast we can build back, and what cost? Because the truth is, the next 10 to 20 years is going to be very different than the last 10 to 20 years. And we have to think about planning and infrastructure and how we actually rebuild. So that's more along the lines of the discussion. I definitely don't think solar will stop another category 5 from coming near us or even making landfall. But I'm
Well,
just
not that
saying,
it would not that it would stop a Cat 5 from coming, but what my question was, and I probably should have asked Doc just now from Jamaica Environment Trust since we were having that discussion, how resilient are that infrastructure, solar infrastructure to a hurricane? Because you have your petroleum, your fuel, your heavy fuel oil sourced, your coal put one side, even LNG put one side. and you can use that in times of disaster, but you can't really draw on solar during times of disaster. And what if the hurricane mash up the solar panels to begin with? Then you're back at square one.
Yeah, a lot of the panels are actually built for Cat 3 and Cat 4 because in Beryl, many solar panels were compromised because of the force of the winds. So, yes, in terms of resilience against a storm, in a storm scenario, it wouldn't serve that much of a purpose. But just from the standpoint of being able to start back quicker, there might be situations where just being on the grid, it might take longer for JPS to reconnect you, is what I'm saying, as opposed to saying having more resources in the energy mix that will allow you to have backups.
Mm.
So generators for argument's sake. So let's leave the solar panels alone. Generators is another way of having that same conversation.
Yeah.
How do
So
we get?
on an individual level, solar panels make sense. And I hear some of my friends out west saying the same thing, that okay, they're still waiting on JPS to reconnect them. It's gonna take some more weeks probably because the light poles are still down, and they're not looking to invest in solar for their homes.
Right. So it's just really a conversation about the grid and how we manage the grid and the ability to bounce back from shocks like these that will disconnect us from the grid, and being able to have a more effective restart in scenarios like these, because um, we are likely to see scenarios like these more frequently in the future. How frequently, we're not sure, but it's not likely to be another 20 years as we typically would have expected. So, next year being a year that should come with stagflation, we should see a challenge as it relates to earnings for many companies. And that's understandable, but we have to put earnings into context. So, just the way we put earnings into context with the pandemic, we have to do the same thing with the storm. However, the other side of the coin is that if investors are willing to look further down the line, it means that right after that period of negative growth, you're likely to have recovery growth, as we saw with the pandemic. So
Mm-hmm.
it means that in 27, 28, we are likely to see a significant increase in economic recovery growth, because recovery growth is different from value added growth. Value added growth is growth that is on top of what would normally be there in terms of output. But when there's a period of reduction or a recession, the initial increase that you would have seen is likely to be higher than normal because the growth is catching up. So that catch up growth is likely to see higher percentages than in normal scenarios. So Jamaica normally grows between 1% and 2% per year. In those recovery periods, we're likely to see much higher figures, as in the case with Bahamas. Bahamas saw growth rates at 8% and above after the initial contraction in the pandemic and the hurricane. So investors need to extend their time horizon. It doesn't mean that they shouldn't invest, they should look further out and to put the the performance into context. Sometimes you look at numbers in a vacuum and say, boy, this year is so bad, I feel depressed, I need to come out of the market. Sometimes it's a matter of repositioning and investing appropriately. What investments can continue to throw off cash in an environment like this? Infrastructure assets such as Trans Jamaican Highway, etc., etc. So it's about looking at the overall thesis and really preparing the portfolio for what is to come, as opposed to playing victim and coming out of the market and saying, okay, there's no money to be made.
Okay. Lots of food for thought there, Julian. Thank you so much.